Fundsupermart.com.
Hi, what is your outlook for Asian investments as we enter 2014?
Our team view is to favor equities over bonds. Two main reasons, because tail risk has been mitigated in the global economy, and the second reason is we're seeing better growth prospects going to 2014. Having said that, we are still worried about the impact of QE tapering on Asian assets. And also because of political risk, because a lot of Asian countries are facing elections in 2014. But if we can look beyond this QE tapering and political uncertainty, we are seeing brighter prospects for Asia, mainly because the middle class is growing, so they'll be consuming more and they'll be good for corporates. And also secondly, because their reforms are underway, especially in China, so they can be expected to pay good dividends in the medium term.
Given this outlook, can you briefly explain the fund's current allocation to equities and fixed income?
We have 50% in Asian equities in the fund and 35% in Asian fixed income. We favor equities, that's why we have 50%. We have a reduced allocation to fixed income. It's quite close to the lower range that we have of 30 to 70%. So main reason is because the impact of QE tapering is going to be more pronounced in fixed income rather than in equities. Equities also most likely will benefit from better growth prospects. We also have 10% allocation to global assets for diversification purpose and also because we have a good source of growth coming from the developed world. So we believe that having diversification in the fund will be beneficial for our investors.
The Schroder Asian Income turned in an impressive return of more than 20% in 2012. Year to date, it has recorded a not too shabby single-digit return. What are the reasons for this volatile return profile, and what can investors expect from this fund as we approach 2014?
Interest rates were very low in 2012, so that has ignited the search for yield theme, which saw all assets that pay good dividends and high coupons benefit, so they have been highly sought after. In 2013, what has worried the market is QE tapering. So in May and June, all high-yielding assets sold off, but they subsequently recovered quite a bit. Now, going forward into 2014, we need to differentiate between QE tapering and interest rates rise. QE tapering may happen, but interest rates may not rise significantly because growth is still going to be weak, which requires interest rates to be low in order to support a growth environment. Now, in the portfolio, we have an indicative yield of around 5+%. We calculate that from the underlying assets dividends as well as the underlying assets coupons in the fixed income portion. So we believe that that is still an attractive strategy. So for investors who is able to ride through QE tapering and able to ride through political uncertainties in Asia, we still believe that they can stand to reap attractive rewards by being invested with us.
Thank you.